Hi there, it's Cristina Dougherty with Cristina Dougherty and Associates, and I am here again with my good friend Terry Shank with Prosperity Home Mortgage, and we are going to have a chat today about the two types of, or the most common home loans that my clients can get. So Terry, let me ask you, who is considered a first-time home buyer? Is it just someone who's actually never bought a home?
Actually, no. That's a big myth in our industry.
Okay.
It's typically for most programs that give special incentives or programs to first-time home buyers. It's typically 3 years where they haven't had any ownership interest in a home.
Okay. Okay, so I could be a first-time home buyer.
You
By
could-
the guidelines.
Correct.
Okay.
And typically we will verify that by getting the most recent 3 years of tax returns to make sure there's no mortgage interest write-off and those types of things.
Okay. And why would someone get a government loan versus a conventional loan?
That's a great question. I mean, typically what you want to do is talk to a loan officer to see what programs you qualify for and then have them go over each of them, the pros and cons. A lot of people will use the government loans because for VA, for instance, it doesn't require any down payment. You can do 0% financing.
Okay.
And even with doing zero down, the rates are extremely competitive and there's no mortgage insurance. So that's a great benefit to our veterans. With FHA, that's commonly used. That's a more credit forgiving program.
Okay.
So if you don't have excellent credit, they don't ding you a lot on interest rates.
Okay.
And it also only requires 3.5% down. So bottom line on the government loans and FHA is that they also tend to be more credit forgiving than what the conventional or the conforming loans would be.
Okay. And conventional, there are different loan terms as far as length, correct?
There are, yeah, and some of that actually applies to the government loans as well.
Okay.
The most commonly used term is a 30-year fixed rate.
Mm-hmm.
That's kind of the vanilla, the loan that everybody knows about. But then there's also terms of 25 years, 20 years, 15 years. And there's also what's known as ARMs, adjustable rate mortgages. So there's quite a few different terms within each of those categories.
Okay.
And there's pros and cons to everything. So it's always good to have go over your options with your loan officer.
So if I was thinking about buying a house, maybe in 6 months or a year, is it too early to meet with you?
It's never too early. It's actually recommended to do it as soon as you're thinking about buying a house. We work with a lot of people that are a year to 2 years out.
Yes, we do.
And the advantage of doing it up front is even if you're not ready today, we can put you on a roadmap, to give you an idea of what payments are going to be, how much to save for, and just educate you so that it's not panic time when you're out looking.
Okay, Terry, what's the best way to reach you?
For me, I use just one phone. So
Okay.
I have my cell phone on me all the time, and that number is 703-408-3978.
Great. Well, I really appreciate your time today.
My pleasure.
It's always very informational. And if you're looking to buy or sell, feel free to go to our website, www.GetKeyedUp.com, or give me a ring, 703-969-0471. Thank you.